With my experience and your ambitions, let's navigate the world of business, making informed choices and capitalizing on every opportunity. This is a comprehensive guide on SBA 504 loans, but tailored for special use. So these are owner-user properties like an auto body shop that I'm going to use an example today that's priced at $1 million, and then a healthcare building specifically for mental health purposes that's priced at $12.5 million. And this video is going to help break down the complexities of 504 loans, highlight some benefits, and then provide some detailed examples to help you understand how these loans can facilitate your property purchase, whether it's below or above the $5 million mark. So the first is to kind of understand, just like a quick overview. The 504 loan program is designed to provide small businesses with long-term fixed rate financing for major fixed assets that includes land, buildings, and machinery. And these loans are intended for businesses that plan to occupy at least 51% of the property they purchase. It doesn't have to be 100%. And it's a great thing to know if you didn't know it, because you can actually rent out part of your building and still be considered an owner-occupier. And the program is particularly beneficial for owner users looking to acquire commercial real estate or equipment while keeping their down payments low and the interest rates competitive. So some key features are, there's long-term financing. It could be terms of 10, 20, and even 25 years, amortization. You have competitive fixed rates to protect against market volatility. And then the low down payment. Now, typically it's only 10% of equity required from the borrower. That's your actual cash down to make a deal happen. But for special use, it will jump up slightly to about 15%. Now, if the property's been vacant, the lender and the SBA could justify under their guidelines that they're going to ask you to put up to 20% down. Now, let's think about special use properties and their definitions. So those are those with unique designs or features that kind of limit their utility to specific uses. So in this case, an auto body shop, they may have pits where they change the oil. They've got those car lifts. Gas stations, clearly, you can only use it to put gas. Hotels have a very specific use. Cold storage, for example, vineyards, car washes, and even medical facilities. Not medical office, but facilities. So think of like an acute care center, a medical rehab center, where if I were to have that company leave, medical, like a hospital, can't just be immediately repurposed for an office building. And so the SBA recognizes these properties and provides guidelines for their financing through the 504 program. Now, if it isn't clear already, it's 50, 40, 10. 50 is the portion of the loan that stays at the bank level on their balance sheet. And then there's the 40%, which goes to the CDC and is turned into a debenture, or it's a fancy name for bond. And then there's your 10% down. So 50, 40, 10, that's how 504 kind of comes together. Okay, so like I mentioned, we're going to look at an auto body shop and an office building, medical healthcare facility at $12.5 million. And so when you look at the structure, the CDC, they cover up to 40% of the project cost, and they are capped at $5 million, or $5.5 million for certain projects like small manufacturers or any energy efficient project. And then there's that bank portion, like I mentioned, that covers up to 50%. And then there's the borrower's equity at least 10 to 20% of the project cost. There's also a fourth part, which is the bridge loan. The debenture portion, that part that is sold into the secondary market, can take a minute. It can take anywhere from 90, 180 days. And so you want to have confidence to be able to make an offer to the seller of the property to say, you know what, I can close in 60 days, not 180 days or 9 months, because you'll never get to be able to compete against other buyers. And so that bridge loan is usually offered by the bank, be able to make sure that you close at that 45 or 60 day level. Now, if you don't know what CDC stands for, that's for Certified Development Company, and they're usually nonprofit organizations that are certified and regulated by the SBA. And they work with a participating lender like a bank or credit union to provide the financing to small business under that 504 program, specifically for the acquisition of major fixed assets like real estate and heavy equipment. And the CDC's role is crucial in the 504 loan process because they facilitate the SBA guaranteed portion of the loan, which is at 40%. So this portion is backed by the SBA. The SBA doesn't actually lend any money. They're just providing the guarantee. And then that 50% is provided by that conventional lender. So when it comes to packaging the loan, the CDCs assist the borrower in preparing and packaging the SBA 504 loan application. And they're really integral. These guys are usually really smart. They understand the guidelines very well. And oftentimes when I'm doing a 504 loan with a client, the financials may have some challenges. There's a lot of story behind what's going on with that business, but it's a great thing because they've reached a place where maybe they no longer want to lease. They really feel that owning and using a location would be much more efficient for them. And so they're the ones that submit the loan to the application, they're the one that submit the application to the SBA for approval. And once approved, that CDC issues the debenture to fund the SBA's portion of the loan. They also service the loan, which means they actually handle the collection of the monthly payments and ensure that you remain in compliance with SBA regulations. So let's start here with I put together a spreadsheet here. And as you can see, I did owner user under 5 million and owner user above 5 million. So here on the left side, it's divided here by the black column, is a purchase price of $1 million. And like I said, the goal today is to cover special use. And so we're going to assume 15% down. And so the actual loan amount is $850,000, but it's broken out into two pieces. So the 50% is that bank portion at $500,000. And then the bank interim loan or bridge loan is at $350,000, which is 35% of $1 million, because that CDC loan is going to take a minute to sell into the secondary market, right? And so the bank loan is going to be somewhere, maybe they'll offer you 25 years. I would say that the rate would be fixed at about 5 years at a time. And so a payment like that at $7.25 for $500,000 would be about $33,600. They'll normally have a prepayment penalty of some kind. They don't want you to pay them off early. They want to earn their yield, right? And then normally that bank bridge loan is usually interest only. And that way you're able to close in a reasonable amount of time while the secondary note, the debenture is sold. And so there's that $350,000. So there's not 3 loans, there's always 2. And as soon as the CDC notifies you, they would pay off this bridge loan, and then you would have this beautiful, long-term, fully amortizing note for the 40% or 35% of the note. So you can see how much you're saving here. It's almost $600 a month. That's almost $7,500 a year. The thing here, though, is that because it's fully amortizing, they pretty stiff prepayment penalty. So it's usually 10 years. And what's nice is that a lot of the costs associated with the transaction are actually financeable. So that way you're coming out with as little cash as required to make the deal happen. There will be other fees, the appraisal, environmental, documentation, so you got to think about, what that might look like in terms of cost. Here on the right side is a deal at above $5 million. So now we're going to look at an owner-user deal above $5 million. In this case, it is a rehab center in Columbus, Ohio. So this is basically, it says here, it's a healthcare property, right? It's got patient rooms, an acute hospital area, an outpatient area, and residential treatment. So you can't just convert this into multifamily pretty quickly, right? So it's considered special use. And in fact, here it says land use is hospital. So that's pretty specific. So as you can see in the pictures here, they've got a basketball court, they've got a full kitchen, there's a reception area, pretty big property. And so that's why it's considered special use. So if we look back here at the owner user above 5 million, let's say that we can negotiate, I think it was on sale for at $14 million. Let's say we negotiate and we get it down to 12.5. So here's your 15% down at 1.875, and there's your loan amount, 10.625. Same thing, right? Now it's just bigger numbers. $6.25 million first, and then you got your $4.375 million bridge loan, and then your debenture. So same kind of setup where you have the first amortizing at 300 months or 25 years, probably fixed for 5 years at a time. Your bridge loan, it's normally going to be prime based. No lender's going to want to take market risk, especially right now. And they're going to provide some type of spread, which that makes sure that they're making money. And then you have your fully amortizing debenture there. So saving almost $10,000 a month once that thing goes into use there. So as you can see here, pretty significant savings compared to the bridge loan there. And you're able to still buy the property at 15% down. So it's a pretty effective way to grow your real estate portfolio as a business operator, where you have been able to take that step from maybe leasing a location or operating out of your house, for example, and then moving on to owning and operating a facility that really helps you grow your business. Okay. In terms of eligibility, you got to be for profit. They do look at some nonprofits. You got to be occupying at least 51% of an existing building. If you plan to build the building from the ground up, you're constructing a new one, they want to see 60%. And there are typical small business size standards, industry-specific criteria. Your FICO score probably should be above 660, and you want to have a strong credit history to show that you have ability to repay the loan. And one of the things that I like about the 504 program and even the 7A program is that you can do what's called a projection. A projection meaning that you can take 24 months into the future and say, this is why we can afford this property or this loan, and really show in a business plan and then in the projection how you're going to make it happen. And so we specialize in that. We've helped a lot of clients who know that their business is growing, and maybe at this particular moment they're not quite there yet, but because they need this space to be able to put in this heavy machinery or to just have the space to add staff, etc., that they can get to the revenue projections that they propose. And so what will help is really do an in-depth interview, talking to the client to understand how they acquire the client, how they manage that process, how they're going to find economies of scale by growing in terms of if it's a product, how they can save money by scaling, and then showing that in real numbers, and really take the time to show the SBA and the lender how they intend to repay the loan. So like anything, proper planning, including a strong business plan, financial projections, is essential for securing and utilizing these types of loan. There's lots of nuances in how they apply to different property types and values, and you can make an informed decision to drive growth and stability, and that's where we come in. Because if you're considering purchasing a property for your business, consulting with somebody like us who understands the ins and outs of what the SBA is looking for will make sure that you're successful in the process, because it is a lot of paperwork, because you're getting that 90% or 85% leveraged to make it happen. Hope that was helpful. If you have a deal that you're looking at and you need financing or are looking for ways to grow your company, we're here for you at Shokunin. I'll put my number and contact information on the screen there, and we look forward to hearing from you. Thanks for watching Profit or Pitfall.